Hi, everyone. Thank you so much for joining us today here in person and online. My name is Sokha Yous. I'm a financial wellness counselor here at Mayo Employees Federal Credit Union. Today's topic, we're going to talk about year-end financial checklist. Throughout the presentation, if you have any questions, comments, or concerns, if you're online, please go ahead and type it in, and then Darian will let me know if there's any questions. But if you have any questions here in person, then let me know too, and I can go ahead and stop and answer you. This is my contact information. That's my phone number and email address. If you don't have anything to write it down now, you can always go to our website, mayocreditunion.org, and my contact information will be on there as well. But today what's on the agenda today, we're gonna talk about reviewing your credit report, talk about organizing your finances for the end of the year and also moving forward to the new year. Review your insurance policies, prepare for taxes, budgeting, and review your student loan status, whether it's a SAFE plan or the PSLF plan or the regular plan that you're on. So there's a lot of changes coming up in the new year with the new administration. So when it comes to taxes and student loans, it's always going to be, constant changing. And so we have to constantly keep an eye on the news and see what's been updated and what has not been updated. So an overview, in 2024, as 2024 draws to a close and accepting bills over planning holiday celebrations with family and friends, we have one more thing on our holiday to-do list, and that's to review your year-end financial checklist. It's common to reflect on what you've accomplished and where you're headed personally, professionally, and financially. Here are some of the essential personal finance to-dos to help wrap up your year and prepare for the year ahead. So we want you to review your credit report. So the free one, the one we recommend, the safe one, is annualcreditreport.com. If they're asking you to put in your debit card or credit card, don't do that because it's supposed to be a free website and it's a trusted website. So they're going to ask you for your social security number. They're going to ask you for if you have a current, car payment or mortgage payment. They'll ask you to verify that. So go ahead and trust this website. It used to be .gov, so now it's annualcreditreport.com. We absolutely trust this one. So we want you to review your credit report. We want you to make sure that everything on there is accurate, like your name, your addresses, your current and your past addresses, your phone numbers, your employers. If something on there is inaccurate or out of date, by all means, just dispute it and update that information with them. It's really important that they have your current information in case a creditor, a past creditor or something is trying to get in touch with you. That way you know exactly, where to send the important letters to. We want you to know your numbers too. We want you to know your scores. So of course, annualcreditreport.com doesn't provide a score for you, but you can go to Credit Karma and get your score. If you have credit cards, a lot of times those credit cards will give you your credit score as well, or your bank will give you those credit scores as well. We want you to know your numbers and understand what goes into a credit score. So know what your score is and why it's important. Okay, obviously the most important thing that goes into a credit score is your payment history. 35% of your score comes from your payment history. So it's really important that if you do fall behind, or if you're having a hard time keeping up with your payments, whatever it may be, whether it's a car payment, a mortgage, or credit cards, by all means reach out to your creditor, let them know what's going on with your financial life, and be quite open and honest with them. I was in collections for 16 years, and I always appreciate people calling me ahead of time, letting me know exactly what's going on, so we know what kind of options we have available for our members. And you should do the same if you are struggling, so it's always good to reach out to your creditors. There's always going to be options out there available. And 30% of the amount owed or credit utilization makes up your credit score. So for example, if you have a credit limit of $10,000, it's always best if you stay under 30% of that spending. So spend up to $3,000, pay it off as quickly as possible. If not the entire balance, and it's always best to keep your utilization as low as possible. That shows that you have discipline to not use all of your available credit. 10% of your credit score is your new credit, so be careful when you're going to all these stores like Kohl's or Home Depot and Macy's, if they're offering you to open a credit card so you can get 30% off your purchases. You really have to reevaluate that. Do you really need a new credit card right now? What is the interest rate on those merchants' credit cards? And usually it's about 29 or 30%, whatever the highest your state available allow is. So a lot of times it's 29%, 29.99%. Do you really want to save 30% now? And then are you going to be able to pay off the entire balance here within a month or two? So it's something to really consider. And then that piggybacks onto length of credit history. So the longer your credit history, the better your credit score. It makes up to 15% of your credit score. So when you're opening new credit, you're shortening the lifetime of your credit score. So just be careful with that too. 10% of your credit score is credit mix. So for example, mortgage, student loans, car loans, credit cards, personal loans. That's considered a good mix. But if you don't have those things, don't go out there and just get those things just to have a good credit mix. We want you to be able to pay off the current debt that you're in now. So this is what is the very basic what makes up your credit score. So we want to make sure that there's no fraud, of course. You can dispute any fraudulent activities. So if you do see any on your credit report, they make it really easy to do that on Experian, on TransUnion, and on Equifax. So when you go onto annualcreditreport.com, you have the option to pull up all three credit bureaus, all three credit reports from those major bureaus. So be sure that if you're disputing on one, you dispute on all three. Make sure things are reported accurately, like showing late payments when you make the payment on time. So that can be detrimental to your credit score. So make sure that everything is reported accurately. If you had some sort of arrangement with a creditor, but they're showing that you missed the payment, you can reach out to that creditor directly to let them know that they made a mistake, or you can dispute it with the credit bureaus, and then the credit bureaus will send the creditor a letter for them to correct it. We have a certain amount of time that we have to respond by. But also you can just call your creditor too and let them know. Oh, sure, yeah.
Sandy H asks, does closing a credit card negatively impact your credit score?
That's a great question, Sandy. So when you close a credit card, it depends what's on your credit report, right? So if you have a lot of credit cards, you already have a lot of, a mix of credit on there, and your credit balance was at zero and your available credit wasn't that high in the first place, then closing out of credit cards may not affect it that negatively by that many points. But if you're on the opposite spectrum where that one credit card is your longest standing credit card with a large available credit, and you close out that credit card with a zero balance, and now it shows that you do not have that available $10,000 available credit, so it shows that you have less access to money, and now that you close your longest credit card, the length of your credit history is now shorter too. So you want to, there's a few things to assess there. And why do you want to close out your credit card? Did you close it out because you don't want to use it anymore, or you're unhappy about the annual fee? Or do you want to close it because you just want to get rid of all credit cards, or is there a balance on that? Sandy, if you have any more questions about your personal situation, you can email me. We can, touch base, and I can go over some more specific questions for you. But in general, it could hurt. It could be, it can have a negative impact on your credit score if it's, a long-standing credit card, if it has a large available balance on there. And next, we're going to talk about how to organize your finances. We want you to gather all your checking account information, savings account, credit cards, loans, investments, retirement accounts from former and current employers. So when I meet with people, a lot of times they have, 3-4 different 401ks or 403b that are just floating around from their previous employers. I always recommend that you just go ahead and consolidate it. They make it really, really easy with Fidelity. If you're, with Mayo, Fidelity makes it really easy. Or if you're with someone else, reach out to the current 401k provider. Let them know, or 403b provider, let them know that you're interested in consolidating all of your investments and retirement under one account, and they can help you get through that. So the reason why we want you to really gather all your information is just to make sure that you have a bird's eye view where everything is at. So if something happens to you, at least someone knows exactly what sheet to go through. You have a checking account here, savings account here, the beneficiary, and things like that. So I want you to look into your retirement consolidation if you have multiple of them, or have an organized list of your accounts all in one spot, whether it's a digital list, or whether it's in your email. However you want to keep that list, just have a master list of where all your accounts are at. We want you to review beneficiaries, rates on accounts, and subscriptions. So it's really important that, with beneficiaries, that we update that every year. Whether it's the same, people or person, just make sure that everything is correct, that their address is still correct, their phone number, their social security number. If you didn't have all that information before, it's a good time to update that. And also, if you have high interest rates on different accounts, if you got a car loan this year and the car loan was at its height where, your interest rate was maybe at 9%, but now your credit is a lot better and you can, reconcile, or you can refinance your loans and see if you can get a lower interest rate too. And also, once you go audit your accounts, let's take a look at what kind of subscriptions you have too. Are you using all these subscriptions? Do you need to have Hulu Sports during the summertime, or are you only using it during football season? Or, Paramount have some new shows coming out. Are you watching those new shows, or what is it that you need to update and cancel? So this is an example of what a master list looks like. This doesn't belong to anyone in particular, but it just kind of gives you an idea. So it's a very basic Excel spreadsheet. So as you can see, you can put your bank and credit union information. You can have the institution's name, the type of account that you have, different, account number. You can put in your password, your member number, things like that, and then you can go down to investments, assets, credit card loans, whatever kind of financial accounts you have, you can just put on a master list, okay? So it's really important that, things for like investments or assets that you put down, that you list who the beneficiary is as well. So, but I know with Mayo, they have an elective program called ROC where you can, have an attorney write you up a will and trust. You can do that too, and you can include this as part of your will and trust too. So that's something to always review as well at the end of the year. So we want you to organize your finances. What should you review? Your beneficiaries, life changes. Did you have a baby this year? Did you get a divorce? Did you want to add a sibling? Whatever the situation is, review your beneficiary. Add or edit your list. Debt interest rates, your credit cards and your loans. Student loans, mortgage, are you looking to, refinance your mortgage next year? Is your credit score where it needs to be? Your credit cards, are you able to call your creditor and see if you can negotiate that interest rate a little bit, since if you were a longstanding member of theirs? So something to always review. If you started out with a starter card of a high interest rate of 29%, it's always good to call up that creditor and say, I've been a member of yours for 2-3 years. I've paid my bills on time every month. Is there any way that we can lower my interest rate from 29% to something much lower, because I've shown you that I'm able to pay things on time. I'm a good member. What can we do to lower my interest rate? Because remember, the lower your interest rate, the more money you save. So that's the goal there. Asset interest rate. So again, high yield savings accounts. Are you just leaving your money in a regular savings account where you're barely getting any, dividends from that account, or do you want to move it to a high yield savings account, high yield checking account? So it's something to research as well. Are you interested in moving to a money market account? And then what is the difference between the two? Do you need to move a few things with investment or retirement accounts? Do you need to talk to your investment advisor about rebalancing your account, which is something you should do every year as well. Before the end of the year, it's always good to rebalance your portfolio. So just reach out to Fidelity or Item Financial, whoever it is that you're dealing with your 401k or 403b. Ask them if you need to rebalance your portfolio, and they can help you with that too. Do you need to move accounts to better, for better returns? It's okay to move accounts. You move your money to a bank that's offering a much higher high yield savings account, or whatever dividends whatever rates that you might be getting back. Or do you need to move financial institutions to avoid monthly or yearly service charges? So for example, with Wells Fargo, if you don't do a direct deposit of a certain amount each month, they charge you a monthly service fee. I think it's either $15 or $18. Is that the situation that you're in? Are they charging you that? When you audit your accounts with your bank or institution or credit union, you might want to take a look and see what kind of monthly charges or yearly charges you're getting. That goes with credit cards too. Are you paying a yearly membership fee with that credit card? Is it really worth it? If it's not worth it, then you might want to explore closing out a certain accounts, okay? Adjust contributions based on your budget. Yes, hi, yes.
So right now, there's a lot of online banks, high interest rate. So you just search.
Yeah.
But you never know. They don't have a physical location.
Right.
So how can you trust them to move your money?
Yeah.
Okay.
That's a really good question.
It's high interest, but
Right. That's.
checking that. I think government, the
FDIC insured. Yep. Yeah.
like searching the internet,
Yeah.
FDIC have that bank's name. So that means secure.
Right. Absolutely. So the question is, when you go online, you just type in a high yield savings account, you see all sorts of banks and institutions that pop up. How do you trust which one is legitimate? And you brought up, if they're not on the FDIC list, then they might, you might want to trust a different bank that is on that list, because then your money is insured. So it's really important that you do your due diligence before you move all your money or some of your money to these online banking, especially if they don't have like a brick and mortar location, right? It's hard to trust. Just like here, we have a location where you go to, so you know to trust us because you're seeing us face to face. But with all these online places like SoFi or so many other places, it's just, who do you go see when you need to talk to someone about your money? And is it really safe? So that's something that requires a lot of research on your end, and you have to make sure you do your due diligence there. So yeah, that's a great question. You want to adjust your contributions based on your budgets and goals, right? So if this past year you were contributing to your 401k or 403b at about 5-6%, but this coming up year, maybe you had a baby, you have to pay for, daycare coming up. Do you need to readjust your contributions for your retirement? Is this something that you need to talk to an investor representative about? So just consider what is in your budget, what are some of your financial goals coming up for 2025, and then adjust your contributions and see if you are, if you're able to pay off some loans coming up, or if you need to increase your contribution too, if you already paid off your loan this year. So whatever your personal situation is, it's really important that you review that with someone too, just to get a second set of eyes. What should you review? Subscriptions and memberships. Cancel any unused ones or pause for the season. Cell phone plans. There's so many, a lot of competition out there. So there's always some cheaper plans, cheaper phones, really good phones. I mean, I think they're coming out with new ones every 6 months or so. So there's always really, really good plans, but do your due diligence and see, is it just an introductory rate? Is this going to be only for a year, 6 months? What is it going to be after the introductory rate? Do you need to have all these extra, fancy stuff that's included on your services? Because a lot of times now we just see the bill either through our email or coming through the app. We just see the amount and we pay it, or whether you pay it manually or you do automatic payment. But a lot of times people are not really going into the bills and see what is it they're being charged for. Is it being charged another iPad that you didn't have? It could be fraudulent stuff on there too. So it's really important that you review your bills each month, because I know how easy it is to just let auto payment each month. So with cable and internet, evaluate your usage. Did you use all that data? Do you really need unlimited data now that the kids are out of the house? You're no longer using a lot, or can you just use your phone? So what is, reevaluate that. Do you really need a phone line? Because they always try to sell you the bundle. So something to really reevaluate. Do you need to cancel a few things, cancel a few channels? What do you see yourself? What are some of your financial goals and personal goals coming up in 2025? Do you want to watch more 90 Day Fiancé and Discovery Plus, or do you want to be more out and about? It's up to you. So just something to really consider as well. And it's something that I recommend people doing every 3 months or so, because if you are not using that subscription, then might as well just cancel it so you can save yourself some money. We want you to review your insurance policies. This includes your home, your renters, your health, your car, your life insurance are all up to date with enough coverage is more important than ever, especially your health insurance. Do you have enough coverage? Do you know how much your out-of-pocket max deductible is? Do you know what your regular deductible is? How much will the insurance pay after you pay your initial deductible, and how much will insurance pay after you hit your out-of-pocket max? I think it's something that a lot of people really need to sit down and try to understand, and make sure that you have enough money in your account maybe to cover those deductibles. Again, with car insurance, do you have enough coverage? Did you get a new vehicle? Do you need to increase your coverage? Just look at your past history. Is it cheaper for you to pay the 6 month premium so that we can get a discount, or is it better for you and your budget to make monthly payments? But it's really important to review your car insurance to make sure that you have enough coverage, especially during the wintertime. Do you need to increase your coverage a little bit more? For in the wintertime, there's just more accidents around that just, the normal. So do you need to increase your car insurance at all? And do you need to lower your deductible too? Homeowners and renters insurance, are you getting enough coverage? Are you, so when you initially got your homeowners insurance, was it just barely enough to cover the basics? But now that you've accumulated more assets in your household, is it going to be enough to cover that new diamond ring that you got, or the new TV? or the new vehicle that's sitting in the garage, or the new toy that's sitting in the garage and stuff. So it's really important that you talk about your renter's insurance and homeowner's insurance with your insurance provider as well. It's really important to know how much deductible you have to put down and how much they will cover. And again, life insurance is very important too. So a lot of times our life insurance is provided through our employer, but are you in the position where you need to buy additional life insurance? Is your beneficiary updated? Is it going to be enough to take care of your family if something happens to you? So something to evaluate as well. I know it's not a fun topic, but it's necessary. And also health insurance, what to consider. Are you adding a dependent on a health plan? We know that goes up quite a bit, so we all know that the premiums are quite expensive. Do you want to adjust for income changes when adding a dependent? If you're adding a dependent, now your medical insurance is more expensive per paycheck. Do you need to lower your 401k contribution or 403b contribution to kind of offset that expense a little bit? That's something to really consider as well. Know your deductibles and what is covered. Again, it's really important that you'd be surprised how many adults I talk to that don't know how much their deductible is for car, their medical insurance, and for homeowners insurance as well. So it's really important that you educate yourself on that. Do you have enough in your savings account for deductibles, or is this something that you can put on your HSA account or FSA account? Something to really consider. Do you have enough in your FSA or HRA to cover procedure or for your deductible? With an FSA, you can use that money, a flexible savings account, you can use that money towards your deductible, for medical deductible. HRA is a health reimbursement account. Do you have enough in there to cover your dental? And then what is the maximum in your HRA that your employer is depositing? Do you have to use it up by a certain date, by a certain amount? Is there a cap on it? Have you met the cap yet, or do you need to, try to get in to see a dentist or an optometrist to try to get, some services done so you can submit it for reimbursement by the end of the year? So know how much you can roll over. I think with an FSA, flexible savings account, you can roll over $650 to 2025, so you don't have to use all that up. With an HRA, how much is your employer allowing to roll over? What is the cap on that? Your car insurance, what to consider. Are you adding a driver to your policy in the next year? Do you need to budget for the upcoming insurance? If you are adding a new driver, like a teenager, it's gonna make it go up quite a bit. Do you need to start budgeting and start savings now for that new premium that's coming up? Do you have life-changing events like buying a house, getting married? Improved credit score or driving history can impact this as well. A lot of people don't know that your premium, your car insurance premium, the number one thing determining your premium is, of course, your driving history, just like with credit cards is your credit history. But the number two thing that determines your premium is actually your credit score. So, for example, if last year your credit score wasn't, the best, and you got a premium that's a little bit higher, and maybe this year, before your next round of premiums that's due, maybe reach out to your insurance company and say, yes.
Is that something we need to notify them of, or does it go into their calculation and premium?
I don't know. You mean like if your credit score improved, will it notify them? No. No, I think it's just based off of whatever credit score you were at before, and then they give you the premium based on your driving history. But it's really important that if you do want to get a new premium, that hey, I've got a new credit score, been working really hard at improving it. Let's go ahead and try to run this again, because it's considered a hard pull on your credit report, so it will affect your credit report. It'll go down for a couple points for a few months, but I think it's worth it if you're going to save some money in the long term for your car insurance. So yeah, reach out to them and see what their procedure is. Progressive might be different than State Farm, so it's really important that familiarize yourself with your insurance agent as well. Now, shop around for the best plan and costs. There's all these online places, these insurance brokers. So just be mindful of putting in your Social Security number. Just remember that they might pull up your credit score. So just be, do your due diligence before you hit enter. Know your deductibles and coverage outlined in your policy. If you hit a pole, do you have enough coverage with your car insurance to cover that accident? Do you have enough in savings for the deductible if something happens? Do you need to lower your deductible for the month for winter months, or do you need to increase your deductible? But remember, the lower your deductible, just like your medical insurance, the higher your premiums will be as well. So just be mindful of that. Homeowners and renters insurance, what to consider. Do you have enough coverage? You want to review it annually. Every year the price of your house goes up, so you want to have enough coverage to see if it's going to cover your house enough. Has a life-changing event occurred? Do you and your friends have any companies they recommend? So word of mouth is always good. Do you have enough in savings to cover the deductible? Life insurance, what to consider for yourself, your spouse, your kids. Do you have life insurance on everyone? Again, it's not a fun topic, especially right before the holidays, but it's important to know too, because when something like that happens, you don't want to think about where that money is coming from. You want to make sure that there's going to be coverage for those parties. Will your family have enough coverage if you're no longer here? Do you want to create an update in estate planning, like your will and trust? How much is that going to cost you? Or do you need to start one? Do you have, are you getting married? Do you need to add your wife to your deed? Or, if you have a mortgage under your name, how does that work? So it's really important that you review all of this too and talk to your significant other or, your family members and see if you have enough. Tax preparations, revisit your tax withholdings. We have some new tax information that's always, it's going to be changing until January. We'll know more. Review changes in dependents and income and marital status. Did you have a new baby? Do you have, are you expecting another baby that's coming up? Did you get married? How does that affect your tax withholdings? Compare your returns from last year to estimate upcoming deductions. Have a plan if you owe taxes. Do you usually owe taxes? Did you already start saving for it? So what's going to happen if you owe taxes? Where are you going to get the money from? That's something that we can chat about as well. Pay for tax preparations with a certified professional. So if your taxes are complicated or more, not as easy as someone that just has a W-2 and claiming single and zero, or if you have properties, you have, kids, you have things that you need to withhold from, medical stuff, business stuff, I think it's worth the money to pay for a professional tax preparation because, it's to avoid audits, it's to make sure that everything on there is accurate for years to come. So I think paying for tax preparations with a certified professional is worth the money. But again, if you can't afford that, then I'm sure that I think Olmsted County have some tax preparation stuff for certain incomes, so something to look into at the library as well. So budgeting, know your numbers. Audit your accounts to reduce your lifestyle creep, right? From 2023 to 2024, how much did you spend? From 2024 to 2025, how much did you spend on certain things like housing, transportation, groceries, trips, hobbies, debt? What kind of trips do you want to have coming up this year? Did you already go to Italy this past year? And you're going to skip, Asia this year and you're going to go back to Italy next year? Or what is your financial goal for the next couple years? So know your numbers and what kind of lifestyle you want to address and you want to save for. When it comes to budgeting, it's not about being restricted. It's about you making sure that you have control where all your money is going to. With that said, if you want to spend money on, your fancy coffee every day, let's go ahead and put a budget out for that, right? But as long as you cut something out from somewhere else, because then we want you to have that balance. We want you to still live your life and also be prepared in case something happens and also help you reach your financial goals as well. Set financial goals for upcoming expenses. Short-term financial goals could be something like, I want to save $1,000 by February. How many do you have to put away between this paycheck and that paycheck by your end goal? Long-term would be like, I want to save for a house. I want to give myself about 5 years to save for a house. Or, did I start my retirement fund yet? Do I need to talk to someone about that? But the point is that you write down your goals or whatever you need to do to remember your goals. And have a due date, have a due date on there. When do you want to achieve your $1,000, savings account? When do you want to achieve your 3 to 6 month living expenses? And then work your way backwards and see how many paychecks you need to save or set aside from each paycheck until you hit your goal. Set a budget and stick with it. Keep track of spending habits and daily expenses. It's really annoying. It really is when you first start. It's not fun because then you're really, noticing what kind of habits you currently have. Why am I spending so much at Caribou? Why am I spending so much here? I thought I was better than this. So, but it's really important that you keep track of your spending. Maybe just, keep track for a month or audit your accounts for the last month or 2 months. And then your daily expenses, be in the habit of writing it down. If you don't want to write it down, there's a lot of good apps out there, for the budgeting apps out there that you can look up and attach it to your institutions or your credit cards just so they can keep track of what it is you're spending. But it's really, really important. The goal is it's really important that you know how much you're spending and how much money is left over. And then we want you to really evaluate the wants versus needs, right? I really, really want the new, whatever it is, the Kelly bag, right, for $40,000. But do I need a Kelly bag right now? Uh, oh, it's an Hermes Kelly bag, but it's like $40,000 or something. So, is it a want or a need? You know, yeah, it's definitely a want, right? I don't really need a $40,000 purse, but it's definitely something on my list. Not my personally, but if this is your situation, so really evaluate your wants and your needs, especially during the holiday season. There's so many advertisement out there, so many different stores and places that's trying to get your attention and your money. So just be mindful of that. Know the difference and work on building better habits. If you're one of those people that really need someone to kind of keep track of you, you know, just to say, to hold you accountable, like, hey, you know, our budget was to go ahead and not go over $200 this month on eating. Maybe it's something that you and I can meet together and we can, you know, just chit chat for about half an hour every week or something, just to make sure that you're staying on track towards your financial goals. So where do you start when it comes to budgeting? You want to create a list of all your monthly expenses. So fixed expenses will be things like your rent, your mortgage, your electricity, things that are due on the same day each month, but not necessarily the same amount. It doesn't have to be. Your mortgage is going to adjust a little bit depending on, you know, if it's every 6 months or so, or Minnesota Energy will adjust a little bit. The point is that you, the fixed expenses is bills that are going to happen every month. And then your monthly variable expenses will be things like groceries, gas for vehicles. That will adjust a little bit, but we still want to put a cap on it, right? We want to set goals and say, you know what, I want to cut back on eating out, so I'm not going to spend over $200 on eating out, or my hobbies and stuff. What is it that you want to do? So put a cap on that too. So then you can have more money to go towards your savings, different savings categories that you have, you know. Compare your total expenses to monthly income, what is left over for savings. List your savings goals, automate your savings. You can automate your savings directly from your, if you get a direct deposit to your checking account, you can automatically have it transfer a certain amount, a percentage of your paycheck from that checking account to a savings account. It doesn't have to be with the same institution, it could be with a different institution. And also you can do that with your payroll as well. Notify your payroll and say, I only want 80% of my paycheck to go towards my checking account, but then 20% is going to go towards my savings account with a different institution. You can do that with your payroll. So the point is, when you automate your savings, you already know you're cutting out the middleman. The middleman is you. So if you're having a hard time spending, it's a hard time saving because you're spending a little too much and you're negotiating with yourself every time you're about to transfer some money. So do the automate the savings.
Julie K asks, can you give us a link or send this spreadsheet to those of us who want to use this?
Yes, absolutely. So I do have the spreadsheet available. I can email it. Julie, let me see. Are you able to send me an email, Julie, and I can go ahead and send it to you? My email will show up again at the end of the meeting. That would be for anyone too. So it's a free budget spreadsheet. You're going to see some like demo stuff like this. Again, it doesn't belong to anyone. It's just numbers that are, you know, average here in Olmsted County, but it doesn't belong to anyone. So I'll be able to send it out to people. So when it comes to student loans, I can't afford my loan payment. What do you do then? There's still forbearance available. You want to postpone your payment. Your interest continues, though, to accrue, which can cause your loan balance to increase, so just be mindful of that. Make changes in expenses and or lifestyle to better afford student loan payments. You know, or do you need to sign up for the SAVE program or for the PSLF, the Public Service Loan Forgiveness Program? Help is available. You can help me meet with me to create a repayment plan. So the Public Service Loan Forgiveness Program is available. You know, Mayo qualify for that too. Your entire loan balance will be forgiven after making 120 on-time payments or 10 years while working for an eligible employer, which Mayo is eligible. Remaining balance may be eligible for forgiveness. So because Mayo is a 501c3 organization or government entities or other nonprofits, you'll qualify for that. You just have to sign up for it initially, and then you have to recertify each year. So full-time, you just have to work at least 30 hours a week, which they consider that full-time. Eligible repayment plan, make sure you're on the correct repayment plan, and eligible loan types. So this is only available for for federal student loans and not for private student loans. So you can go to studentaid.gov. They have a lot of information. If you go to Public Service Loan Forgiveness, to get started, you can log into your account. You know, if you need help with this, by all means, reach out. Go through it too. Select continue, and these are some of the things, you know, you have to walk through once you're on that website. Additional tools and supports, of course, we're going to be here for you as your credit union. So you can meet with me virtually in person for ideas on how to better plan ahead for your future expenses and to set up a detailed budget. You can use tracking tools to match expenses. You can email me for a template, or you can go to download different budget apps out there. Some are free and some you have to pay for. Know your credit score, review it annually at annualcreditreport.com. Again, that's really important that you know exactly what's on there. Keep tabs on your expenses with services that we offer, online and mobile banking, e-statements, automatic savings, transfers, and bill pay. Again, this is my contact information. That's my phone number, my email address. But if you can't write this down now, you can, if you're online with us now, you can probably do a screenshot, or you can just go to our website, mayocreditunion.org. I'm in the financial education tab of it, and my contact information will be there too. So it doesn't look like we have any questions at this time. And so any questions here? No? Okay. Well, that concludes our presentation. So if you have, oh, yes, go ahead. It's okay.
I arrived late.
Uh-huh.
Did you happen to talk about anything related to when a CD is maturing and deciding what's the best thing to do?
Yeah, absolutely. The question is that when a CD matures, what is the best option, or what should you do with that? It depends on what your, my answer would be kind of broad, but it depends on what your financial goals are for the future. Do you want to go ahead and roll it over to another CD or another institution that may have a higher, interest rate? Do you want to renew it for another 2 years or whatever is available? Is it something that you want to just cash out, depending on what your personal financial goals are? So that comes in with budgeting too. So do you have some big expenses coming up, like you want to fix something in your house and you need, some extra money you don't want to put on your credit card? Maybe you should, just go ahead and let it mature and cash that out. Or do you have enough in, retirement? Do you want to roll it over to some sort of retirement account? So that's something that you need to reevaluate your personal financial goals to really answer that question. So yeah, absolutely. Well,